Okay, we have this chart pattern which is inside here. Okay, this is a chart pattern also. This one means that the trend have to continue to the upside. Okay, now so aggressive, but we didn't break our. Okay, now we continue to the upside. Okay, ejecting from this area, we have also this is also a rectangle, and we broke above this area, so we are going to enter from there and see if we can continue formation of the chart pattern. Let's see what happened. We are still good, continue to move to the upside. Welcome to the Trading Focus once again, guys. Hope everyone is doing good. Welcome to the lesson 17. The chart patterns are the foundation of the technical analysis. That's why today's video we are going to teach you on what is a chart pattern, what are the types of the chart patterns, and what are the most powerful types of the chart patterns that will take you to the consistently make money in the market. So that sounds good, guys. Subscribe on the channel, like the video, leave the comment below, and we'll be back in our lesson 17 in the minutes. Remember, guys, our lessons are not only for forex trading. You can even use them on the stock market, cryptocurrencies, indices, on any other financial market. So that's why you can start from the beginning, where we started with the basics of trading until we are on today on the lesson 17. If you are a beginner, this is your time to get that opportunity to learn from the beginning. Welcome back again to lesson 17, chart patterns. First and first, what is a chart pattern? The chart patterns are the fundamental building blocks of the technical analysis. Okay, nukuvuga ngo chart pattern ni ibuye ry'ifatizo ya technical analysis. If you want to be sure by knowing the direction of the market, you need to know the chart patterns. That will give you an opportunity to know how to analyze the market with the technical analysis by knowing the direction of the market. So they repeat themselves in the market time and time again and are relatively easy to spot. So these basic chart patterns appear on every time frame and can be therefore be used by the scalpers, day traders, swing traders, position traders, and investors. So as I'm saying this, any time frame that you are using to enter the market or analyzing the market, those chart patterns are visible there and are working well. In this lesson, we will learn classic chart patterns and their formations, how to find the potential entry points in up or downtrend, and how can chart patterns offer potential entry signals. So, and again, how do you know when to get out of the market, either by taking profit or if the chart patterns worked, or cutting the losses or managing risk if the chart pattern didn't work or failed? Okay, so let's first take a look on the types of the chart pattern. We have three types of the chart patterns. You have reversal. Remember the word reversal, the change of the direction of the market. We have the continuation, and we have also a neutral chart patterns. What are they? Before we jump to the chart, let's first explain these types of chart patterns. A reversal chart pattern indicates that the price will be going in the opposite direction after a pattern is formed, which means that, for example, this is how when the market is moving down, making a lower low and lower high, and we start seeing the chart patterns below here, we are expecting the market to change the direction, the uptrend. This is the downtrend. We are going to which is going to change the direction to the uptrend. Okay, so for example, as they are talking about, if the price is going up and the reversal pattern appears and the price will go down. If the price is moving up and a reversal pattern will appear from these areas, the market will change the direction to the downside. And when the price is going down, then a reversal pattern appears, then a price will be going up after the pattern. Ukuvuga ngo niba isoko ryarimo gukora iki, niba isoko ryarimo kumanuka hanyuma ya chart pattern ikagaragara, isoko rizahita rihindura icyerekezo rizamuke. Okay, so let's move on the continuation. The continuation, remember, this is when the direction we are in, we will continue also in that same direction. The continuation chart pattern means the price will continue in the current direction after the pattern. The price is moving up, and when we see the chart pattern from this area, means that the price will continue in the same direction, which is the uptrend. Okay, so on the sides of the neutral, chart patterns means the price will either go up or down depending on where the price breaks out of the pattern. You remember about the word neutral. This means that you don't know exactly where the price is going to be going after the pattern. But when you wait for that, you have to wait until the price breaks out and we give you where the market is going. We will see all of that in our breakout strategy. So let's jump straight on the chart and see how can we get those continuation and reversal chart patterns. Okay, this is Euro USD, and you can see from this area the market is moving down. We are making a lower low after breaking this previous low. Lower high, lower low, lower high, lower low. Let's see if we can continue to the downside, and we are waiting for the indication that we are going to change the direction to the upside, and that indication that we are going to wait is a chart pattern. Okay, let's see if we can get that chart pattern as we are moving down. Okay, we started rejecting from this area slowly. Let's see. Okay, the formation of double bottom. This is a double bottom here. Okay, explain one by one those chart patterns in our next video. Okay, this is a double bottom, and now we created a neckline. If you are not familiar with a neckline, this area of resistance, so we need to break out and start making a higher high, because it will be the break of the previous high, which is resistance. It will be the break of the previous high, which will be a resistance, and then by pulling back to make a higher low and then continue to the upside. So that will be a reversal or a bullish reversal by the confirmation of this double bottom, which is a chart pattern. Let's see if we can get that and enter the market. Remember, when we are going to enter the market, we have to look on everything. After we break out, we start confirming to enter the market by the candlesticks. Let's see what happened. Okay, we have now broke out, and we tested from this area with this bearish candle, and then let's see if we can continue and we get a bullish candle. Okay, this is a bullish harami. So now, even if we are getting this candle from this area, we have an opportunity to enter even from there and see if we can get some profit. We can get some pips from the market. Okay, it enter from there, stop loss below the previous low from this area. The target we have is from this area. What do we have? We have TP1. If we reject from here, it will be a TP1. We have a TP2 from this internal support, and we have a target from our previous area where we sold from. Okay, so by moving up, the reason why I'm talking about those TP, first TP and the second TP, that's where you can secure some profit before you start thinking about the rejection of the market and come back down to against your direction. Okay, so let's see what happened. And as we are moving up, we take a look on everything if we are forming some continuation chart patterns. Let's see what happened. The market is moving up, trying to reject from that area. Okay, we come back to our entry from this area. Okay, now we are still rejecting from this area. Okay, let's see if we can continue upside. Okay, now we also have made some internal entries where you can enter from if you are not already in the market. Okay, this is head, inverse head and shoulders. Okay, let's continue and see what happened. Okay, broke above this area, we are rejecting from there. We come back to the supply zone. Okay, if you want to enter from there, you can enter from here by the confirmation of these candles. Okay, let's continue and see. Okay, upside. So we broke also above this area. If you remember about the trend, uptrend means we are making high highs and high lows. So now we broke above this previous high, which means is a high. So we are expecting to continue to the uptrend. Okay, now we have the formation inside here of this chart pattern, which is a continuation. This is a rectangle, which means the trend we are expecting the market to continue moving to the upside. Even if our target is from this area, we can even break above and continue to the upside. Okay, let's see if we can get a confirmation of the candle. Okay, let's see. We are not breaking below this area. We can enter from there and take this trade 1 to 2. Okay, let's see if we can continue to the upside. Okay, we got our TP, 2 TP from this area, 2 TP from this one. This is a continuation. This one is a continuation, and this one where we started from, this is a reversal chart pattern. Okay, this one. So now let's see if we can continue and make some chart patterns that will give us an opportunities to continue in the same direction of uptrend. Those chart patterns we are waiting for are the continuation chart pattern. Let's see. Broke above even the previous high, which was our target. Okay, we have this chart pattern which is inside here. Okay, this is a chart pattern also. This one means that the trend have to continue to the upside. We should be entered, okay, after breaking above, and the stop loss have to be below the chart pattern as we are targeting for the continuation. Okay, let's see what happened. Okay, now so aggressive, but we didn't break our. Okay, now we continue to the upside, which is very, very good. Okay, ejecting from this area, we have also this. This is also a rectangle, I think. Yes, this is a rectangle. And we broke above this area, so we are going to enter from there and see if we can continue. Remember, the stop loss have to be below the low of the formation of the chart pattern. Let's see what happened. We are still good. Continue to move to the upside. Okay, that's how we use the reversal chart patterns and the continuation chart patterns. Okay, remember, in our next videos we explain well about the neutral patterns, because we'll be explaining also the breakout strategy. That's why we are not going to explain to you the neutral chart pattern today, but our definition is that the neutral is that you don't know exactly the direction of the market. You need to wait until you break out that chart pattern so that you can know where the market is going. Okay, on the side of bearish reversal chart patterns, this one before we've been moving up, as we explained, by taking a lot of trades. By the trend continuation, even reversing from this area down. So now we have a reversal chart pattern that shows us that there is a sign that we are going to reverse from the upside to the downside. That is a bearish chart pattern reversal. So let's see if we can break below this neckline, as we started breaking below this trend line, which was showing us that we're in the uptrend. Let's see if we can break it below. Okay, so now we broke below this trend line, which means we are going to keep moving to the downside, as we talked about that in our previous videos, that the history repeats itself in the market. So that's why the movement we got when we've been moving up is the same movement we are expecting upside to the downside. Let's see if we can get from this area where we started buying from. Okay, so which means if you take a short or take a sell from this area and your stop loss is above the previous high, by targeting this area, remember, as we are moving down, we need to see some of the chart patterns which are showing that the trend is going to be continued to the downside. Okay, let's now see what is going to happen. Okay, we moved down, we started making the continuation chart patterns, as you can see from there. Okay, this is one of the continuation chart patterns. Again, let's see if we can continue moving down until we get to our target, which I think we are about to get there. We are trying to reject by forming those continuation chart patterns. Can we get to our target? I think we finally get to our target. You can see that we got our target from this area. So as we've been moving down, we are making our lows and lower highs by creating the continuation chart patterns. Okay, you can see from this area as we've been moving down. So remember, we are going to explain one by one the chart patterns in our next video. Thank you so much for watching. Until next time, take care and be safe.